Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Yesterday, we celebrated the 4th of July, as if you didn't know, right? America's birthday, the 249th birthday in America. The day, of course, was filled with fireworks, as you were probably trying to go to sleep last night, parades, and pride in the freedoms that we hold dear. And I feel so incredibly blessed to have been born in this country and to be able to experience all the wonderful freedoms that we have in America. And if you don't think we have freedoms here in America, just try going to another country and doing what just comes natural to you here in America, and you could get in trouble for it in other countries. So our freedoms I hold incredibly dear. But today we're going to talk about another kind of independence. And you knew I was going there because this is Reverse Mortgage Radio. We're going to talk about the personal freedoms that come from financial security, especially in retirement. For a lot of homeowners, a reverse mortgage can be the key that unlocks independence. And not just from a monthly mortgage payment, but from financial stress, fear of running out of money, and even the pressure of having to sell the home they love. Hi, I'm Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage, and I thank you for tuning into Reverse Mortgage Radio today. We're going to talk about how the reverse mortgage, this powerful financial tool, really works and how it can help you or maybe someone you love to age with dignity, safety, and following the theme, independence, financial independence. And the whole thing with reverse mortgages is it's meant to relieve financial stress and create financial independence. We're going to get into those details here. But as you know, if you've listened to this show before, I always have new people coming on and listening. I also post this show to my website, and I get a lot of people going to the website who are not familiar at all with how reverse mortgages work. They click on this show to listen to it, and I like to explain what a reverse mortgage is early on in the show. That way, if something happens and you have to leave, or somebody visiting the website has to leave or they get tired of it, they at least hear the basics of it. So let's jump into that, because a reverse mortgage is a loan program that was created by an act of Congress in 1987 and signed into law by President Reagan in 1988. A lot of people don't know that this program has been around that long, but it's a benefit for senior homeowners who've earned that benefit through age and equity accumulation. You might think of it like the benefits a veteran receives with a VA loan. This is a benefit provided by the federal government for senior homeowners. It's an FHA-insured loan that's specifically designed for homeowners 62 and over that allows you to convert a portion of the value of your home into money that you can use. And as long as you or your spouse live in the home and continue to pay your homeowner's insurance, you have to keep up current on your property taxes, maintain the home, and keep your name on title. As long as you do those 5 things, you never, ever, ever have to make a monthly mortgage payment. It's not required. No, it's optional. More and more people, not a lot, but more and more people are choosing to make payments on reverse mortgages because there's a lot of benefits for that. And that's more into the financial planning aspect of things, but I don't want to get into that now because this show, we're going to kind of keep it basic on the show with the theme of financial independence, of course. But that's kind of how it works. And you're still charged interest every month on reverse mortgages. What happens is that interest, you're not paying it most of the time. That interest gets added to the loan balance. Every month you get a statement in the mail, and you're going to see that balance getting bigger and bigger and bigger over time, assuming you're not paying the interest. If looking at that statement causes you financial stress and does not give you the feeling of independence, you don't want to do a reverse mortgage. The benefits have to outweigh the costs. If you're not making a mortgage payment and you're saving $1,000 a month, well, you got to remember that when you're looking at that statement and seeing your loan balance increasing by $1,000 a month or whatever it works out to be. Just remember, this is the benefit for not having to make that payment or for receiving money every month or for having the peace of mind of having a line of credit available or maybe all the above. This is an incredibly flexible loan. But basically, remember, you're not making payments. You can receive money. The loan is repaid when the home is sold or no longer your primary residence. The bank does not take the home. That is probably, well, certainly one of the most common myths, but that's false. The bank does not take your home. They don't take title to the home. They don't take your home when you pass away. You have the option to sell your home anytime you want. You can paint it purple, add a bedroom. It's your house. That's why it's requirement for you to continue to pay your property taxes and insurance. You have to keep that up and maintain it because it's your house, right? I remember way back when in the early 2000s when somebody called me, they said, if I do a reverse mortgage and I get a leaky faucet, who do I call? I said, a plumber? Don't call me. It's your house. It's still your house. You have to maintain it, pay the taxes and insurance, and live there as your primary residence, okay? Keep all that in mind. Just think of it like our founding fathers. Let's go back to the theme. They wanted freedom from an oppressive system. And a lot of people today, a lot of seniors today are looking for freedom from financial burdens. And a reverse mortgage offers just that. Freedom from mandatory monthly payments so you can use your money your way. You can keep more money in your pocket every month by having access to this extra money from a reverse mortgage. Now, I touched on it, but I do want to make it a separate section. This is section number 2. How does it work? Eligibility. You or your spouse has to be at least 62 years old. For the FHA version, we actually do have reverse mortgages that go down to age 55. But you have to be, that's not an FHA reverse mortgage. It's a great program. If you're in that situation, please call me. By the way, too, my name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage here in Denver. You can reach me directly with any questions at 303-467-7821. 303-467-7821. That's my direct line. Bruce Simmons is my name. And the company I work for is American Liberty Mortgage. You can visit me online at reversemortgageradio.net. Reversemortgageradio.net is my website. Go there and download my free consumer guide. You can also get a free quote. We don't sell your information. You're not going to get a bunch of calls from other states or things of that nature because we sell your information. It's not a lead generating site. Okay. This is just for me. You put in your information, very generic information, value of home, your ages, your address, things of that nature. No social security number. A quick point. If you're shopping around for a reverse mortgage and a site or a lender says they need your social security number to give you a free quote, hang up and run away. Do not give your social security number out to anybody until you're ready to do business with that company. They don't need it to give you a quote. If they say they do, they're lying. Really, that's the bottom line. They're just doing it to pre-qualify you. And then you're gonna have a mark on your credit, not a mark, but an inquiry into your credit. Anyways, that's a side point. Okay, let's talk about the payment options because there's a lot of flexibility with this loan. I mentioned it before. In fact, a few months ago, I think I did a program, a whole show called The Incredible Flexible Reverse Mortgage or something like that, talking about all the ways that you can use the money. Really, it depends on a number of factors because the government, FHA, determines how much you're allowed to borrow on a reverse mortgage and they dictate to us, the lender, how much we can loan you based on the age of the youngest homeowner, the value of your home, and the interest rate. Those are the three things that determine how much we can loan. And also, then, we have to pay off any existing mortgage you have or any other liens that you have on your home. If your home is worth $500,000 and you owe $100,000 on your existing mortgage right now, that $100,000 has to be paid off before anything else. If we can qualify you, say we can qualify you for $175,000 based on a $500,000 home, then you have to take the first $100,000 of that $175,000 and pay off your existing loan. Now that's a good thing because you no longer have to pay that principal and interest payment. If that principal and interest payment is $800 a month, well, now you just kept $800 a month in your pocket. You do not have to take the rest of the money. You can take a portion of it based on your needs. You decide. Don't let anybody talk you into taking more money than you need to because you're charged interest. If you take out money and you didn't need it and it just sits in your bank earning 0.5% interest and you're being charged 6.5%, that's not a good return on your investment. Most of the time, people take this loan with different options. If you only need $100,000 and we're offering you $175,000, we have to make that money available to you, but you don't have to take it. Basically, what you would do is we take the $100,000, pay off your existing mortgage, and the other $75,000 can stay in a line of credit. The beauty of that line of credit is you're not charged interest on it, and it actually grows over time. And then it's available to you whenever you need it. That line of credit can never be closed out as long as you pay your taxes and insurance, maintain the home, and live there as your primary residence. As long as you do those things, you're never required to make a mortgage payment, and that line of credit can never be closed out. It's going to continue to grow no matter what happens to the value of your home. Your home could drop in value. You could go upside down on your house, and you still have that money available. That option will never be available to you on a traditional bank HELOC, home equity line of credit. You just can't do it. And you never have to requalify for the money either. It's a fantastic way to do it. You can also set that $75,000 up as a monthly payout if you wanted to increase your cash flow. So let's say you're saving $800 a month on your mortgage payment, but you say really need $1,500. Well, we can then take that $75,000 and make a $700 payment to you. Now, that $700 may not last the rest of your life, but depending on your age and things of that nature, we'd evaluate it to see what's best for you. So you could take it out a number of different ways. And then, of course, you are still required to pay your taxes and insurance and all that stuff. Okay? Think of a reverse mortgage kind of like a financial declaration of independence, a way to declare your freedom from financial stress and give yourself more control over how you live during your retirement years. If you want to take a flight to California to visit grandkids, or you want to take a vacation, or your furnace conks out on you in the middle of winter, and it always does in the middle of winter, of course, because you're not using it in summer, or your air conditioning, well, it's nice and hot right now. The hottest days of the year is the dog days of July. Your air conditioner quits on you. You've got that money available to you if you have that line of credit. And you can even change the payment plan down the road. If you have money in a line of credit and suddenly you're going to need it on a monthly basis, you can call customer service, and I can help you with this. Call customer service, and we can switch it to a monthly payment, or vice versa. If you're receiving a monthly payment and you decide, hey, I don't need this, it's just sitting in my bank, stop that monthly payment, put it into a line of credit where it can grow over time and you're not being charged interest because you're not taking it out. Now, the way a lot of people use reverse mortgages, first of all, is to eliminate their mortgage payment. Like I said, of course, we only eliminate your principal and interest portion of your payment. But I think something like 88% of my loans last year, the customers I did reverse mortgages for, owed something on their house. They either had a small HELOC or a big mortgage, whatever. A lot of people also refinanced their mortgage in 2020, 2021 at 2 or 3% interest rate. So many people say, well, I have to give up that interest rate, right? If I get this reverse mortgage, yeah, you do. But guess what else you're giving up? The mortgage payment. I tell people all the time, I say, you can keep that interest rate, definitely. Just keep making your payment. You get to keep that payment as well. And a lot of people, let's say you're 68 years old and you did a 30-year refinance in 2021. Now you've still got 26 years left of that loan payment, and you're going to be paying on it the rest of your life, basically. You're probably never going to have that loan paid in full. So keep that in mind. Another option that people will do is for long-term care. That's probably the second in line, maybe the third, because a lot of people like having that line of credit set aside for emergencies. It's a safety issue. We pay off a mortgage and maybe there's only $20,000 left over. You keep that set aside. If you've got $50,000 in your retirement and $20,000 in your line of credit that's accessible to you, and you know it's accessible right there if you ever need it, that provides peace of mind and that financial independence. You feel more secure with it. But also, a lot of people do it to pay for in-home care, long-term care, or sometimes even home modifications. A lot of people will fix up their home with it too. They use it to put in a ramp in their house, or sometimes just fix it up because they've lived there for 30 years and it's kind of aged and they haven't had the money sometimes to maintain it the way they want to. Or if they have maintained it, it's becoming too expensive because life is expensive right now after all the inflation we've had. Helping grandchildren with education. That's a big one. Or also down payments. It is tough for younger people to come up with 20% down to get a mortgage or even 10% to get a mortgage on and buy a new home. If you, as the grandparent, can help a grandchild or even your son or daughter to get a home of their own, they're building financial security as well. And you don't feel as bad, because a lot of people say, well, I really want to leave something for my kids. You're going to leave something for your kids. Odds are, with the reverse mortgage, because we don't loan 50, 60, 70%. I mean, you got to be 85 or older to get 50% of the value. Most of the loans I do are people younger than 85. I've done loans for people as old as 99, but you can be any age, but most of my loans are probably in their late 60s and early 70s. That's when most people do it. I've also done loans for people, they call me when they're 61 or just getting ready to turn 62, and they say, I really, really want to sign this on my birthday when I turn 62. And you can do that. It's just you're not going to get as much money in that situation. But depending on your situation, it may be the best option for you to do it when you're very, very young, 62 being young in this case. And the other thing too is everybody, all my customers always want to age in place with dignity. That's a key word. Having the financial freedom and not being dependent on family, not being dependent on Meals on Wheels, or being dependent on SNAP programs for food, or the LEAP program to help pay utilities, things of that nature. Granted, those are great, and if your income is low enough, you can get those. And I say take advantage of it. Shoot, they're there for you. But to know that you've got that extra bit of money set aside in a line of credit, it doesn't show up on your income. You don't have to count it. If you're on Medicaid, you can still do a reverse mortgage. We have to be careful about how we distribute the funds. So a lot of this stuff is more technical, and I can't get into it on the radio, but you got to be aware of this, that if you think that you might not qualify for some reason, call and ask. I'd be happy to talk with you. My direct line is 303-467-7821. 303-467-7821. And if you're where you want to be in your house and you want to stay there, a reverse mortgage is great. You can also use a reverse mortgage to buy a new home. If it's not great, you have to have enough equity in the home. So, because obviously if we're only loaning 35 or 40% of the value, that means you have to come up with a down payment of 60 or 65%. And that can be difficult. The way most people do that is by selling their existing home. You sell your current home, you get the cash from that, and you use that as a down payment on a new home. So you want to buy a better home, let's say, or you want to be closer to friends and family. Let's say you're out in eastern Colorado or in a less expensive part of the state, and your kids and grandkids live in the Denver metro area. You sell your home for $400,000. You can't buy anything for $400,000 or very little for $400,000 in Denver, but you could maybe buy something for $600,000. And maybe a reverse mortgage can cover the difference for you, so you still have no payment. That's a great way to do it. So whether you're staying in your home instead of moving in with family, or traveling to see the grandkids instead of worrying about bills, a reverse mortgage gives older Americans the freedom to choose what their retirement looks like. Again, we're keeping with this freedom, independence theme today, okay? Now, let's talk about some fears and myths, because we can't talk about reverse mortgages without bringing up the elephant in the room. Well, the bank's going to take my home. We already addressed that. No, that's not going to happen. Will my kids lose the home? No, they can keep the home. What happens at the end of the loan only comes due when the last homeowner permanently leaves the home. You have to go to assisted living. You can sell your house. You pay off the reverse mortgage, and whatever equity is left, you keep. If, a big if, by chance you happen to owe more on the house than it's actually worth, let's say you owe $400,000, but the house is only worth $350,000, you can sign over the house to the bank and walk away. You don't leave your kids a debt. The kids won't get anything in that situation, but that's incredibly rare these days. It did happen in 2008, but back then we were loaning 60% or more to a lot of people. And it's just not happening very often now, because we've reduced the amount of money we can loan to people so much. And that was based on from HUD. They're the ones that dictate how much we can loan based on those factors, and they've changed the formula over the years to reduce it, okay? The other thing that drives me crazy, I think is the most damaging myth, is that a reverse mortgage should only be used as a last resort, or it's only for desperate people, and that is not the case. I plan to use it, and I certainly am not desperate, okay? I won't be desperate when I retire. I'm not like a millionaire, but I'm going to be in decent shape. I probably don't necessarily need to use it, but I'm going to get it because it's good to have. I like the peace of mind of having a reverse mortgage. Another one, too, that I want to address that I really have never addressed before, reverse mortgages are complicated. No, really, it's pretty straightforward, especially when you just look at it. You're borrowing the money. It's a loan. It's not free money. You have to live in your home, pay your taxes and insurance and all that stuff like you normally would, whether you have a mortgage on the house or not. And then you can pay it back if you want. But if you don't, interest gets added to your loan balance. You're still charged interest every month. It just gets added to your loan balance. So your loan balance gets larger over time. Be aware of that. And then when you pass away, your heirs inherit the home. They do not have to sell it. They just have to pay off what's owed against it. They could go get a new loan for the amount of the reverse mortgage, pay off the existing reverse mortgage on it, and keep the house and all the equity. Or if they wanted to sell it, they could sell it, pay off the reverse mortgage, and keep whatever equity's left. Okay? Just depends on what their goals are. So it's really pretty straightforward. There's a lot of minutia, I like to call it. You can get buried in the minutia. Well, what about this or that? And if the interest rates rise by a quarter point, how will that affect my line of credit? And how will that affect all this? And you don't need to go into all that. If you want to keep things simple, we can keep things simple. Okay? Sometimes I've been very guilty of going into too much detail. And when I'm sitting here droning on for 30 minutes on a radio show, sometimes I do that. Or I'm talking to people and I see their eyes glaze over. That's when I realize, oh, shut up, Bruce. Let's get back to basics. And that's what I have to do. But that's the main thing. So to me, independence means being empowered with the truth and not being trapped by fear or misinformation. There's a lot of misinformation going around about reverse mortgages, about a lot of things, but I'm talking reverse mortgage specifically. So they're not for everyone. We all know that. And the thing that gets me is I hate when people start by saying that. Well, reverse mortgage isn't for everyone, but, well, of course, we know it's not for everyone. Home ownership is not for everyone. Owning a car is not for everyone. So you got to keep all that in mind. A reverse mortgage helps people in specific situations. Are you in that specific situation? I don't know. You may not even know. But if you call me, we can talk it out and figure out, does it make sense for you or not? I'm not going to try to push you into anything, okay? So to wrap up everything in a nice little bow here, as we wind down from the 4th of July celebrations, hopefully you enjoyed it and you had great barbecues and fun times with family. I know a friend of mine in Kiwanis, he's in his 90s. He's got all kinds of grandkids and kids and great-grandkids around. I think he has 8 or 9 great-grandkids now, or maybe more. But they're going to be, everybody's coming over to his house, and they've been doing this for years, and they're going to do the hand crank and make some ice cream, to make homemade ice cream. And I told him, well, luckily you got lots of young arms to turn that for you, because he's in his mid-90s now, or early 90s. Super nice guy. But anyways, as it winds down, reverse mortgages are not for everyone, but for the right person, they're a powerful tool for preserving choice, comfort, and control over your own finances and your own housing options. Okay? If you or someone you care about is over 62, or even in some cases 55, like we talked about, and you want to explore options for a more secure retirement, a reverse mortgage is not for desperate people. And it doesn't mean you failed if you get a reverse mortgage, okay? But I would love to help you out. I'd love to answer your questions, let you know kind of the facts and the pros and the cons too. I explain to people how the loan balance grows over time, what the closing costs are. I break it all down for you line by line. You can then decide, is this right or not? It's up to you. So until next time, remember, you spent a lifetime building your home, your memories, your legacy. A reverse mortgage might just be the key to holding on to them all while living the independence you deserve in your own home. My name is Bruce Simmons. Please feel free to call me with any questions at 303-467-7821. 303-467-7821, or visit me online at reversemortgageradio.net. reversemortgageradio.net. And then call me. Either way, give me a call. I look forward to talking with you, and thank you, and God bless America, right?
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.